What if you could trade gold with a 90% win rate? It sounds impossible until you understand the master protocol. In this 15-minute breakdown, I'm pulling back the curtains on the exact SMC logic myself and my team use to hunt Asian liquidity and strike only when the institutional displacement is confirmed. No indicator, just pure market structure. So what am I looking at on 15 minutes? If you want to understand that, you just need to go look at my uptrend and downtrend video where I explain the same concept and how I determine my trade. So today, what am I looking at? If you can see on the chart, gold was successfully able to break structure in here. It was ranging and at the end the price to the upside. So what is the catch? Before today, I was actually expecting the market to come back to my zone where I use to determine the discounted zone, which is 36.0 Fibonacci. But if I'm not done, I need to look at the area of imbalance where the big players are, which is 670. So I was actually expecting the market to pull back to this zone. Then I go to my 5 minutes and look for my entry, but unfortunately that didn't happen. So what I'm saying, there's another break of structure. What does that tell me? We need to be very careful on gold because what I can see right now is a big trap coming. Gold is trading at the all-time high. So right now they might want to bring a lot of buyers and before you drop the market down. So we need to be very, very careful. But if gold decides to break the structure, and a lot of people might say this is not a big structure, but it all depends on how you interpret your retracement. Maximum of 3 candles is fine for me. I call that a big time retracement on 15 minutes. So once I see this break of structure and a retest, then I think I have a bias. But right now, even if the bias is to the upside, I need to be very careful because gold is at the all-time high. So anything can happen. So if you're not expecting any surprises, stay away from gold. Just let's see what happens. So today's outlook on Great Britain JPY. So if you can see on the chart, there's a breakup structure in here on 15 minutes, which clearly tells us that the market is in a buy trend. So this is the external structure that I'm using to determine this. So once I see this, I take my Fibonacci and see if the price is actually at a discounted zone. So very nice. The market is at 78.6 Fibonacci. I'm very interested in that zone. So what do I do next? I go to my entry time frame, which is a 5 minute. What do I want to see in here? If the market can shift bias from here, I'm interested. So what am I looking at? This should be a BOS to the downside. So let's recap. Taking your Fibonacci to confirm that zone, which is a point of interest on 15 minutes. You can see that it's clearly sitting on 78.6 Fibonacci or 86.0. It tapped into 86.0 Fibonacci. After a liquidity graph, that confirms that that zone is actually a very strong zone I can look into. That's the liquidity graph in there, an extension. So what am I looking at? 2 things I'm looking at. This is a neckline break. For entry, if the market pulls back down to a fair value gap here, somewhere, I can enter the market to the upside. But if you want to stay on the other side and watch the market plays out in your favor, so I'm expecting the market to change character and pull back to 50% or a fair value gap somewhere there, then I can decide to take market. So that's what I'm looking at. So whichever happens, I'm just still on the other side waiting to let the big player give me their hand and I can go with what the market is. As a trader, I want you to learn patience because patience is virtue. Once you know how to hold your emotions in trading, I don't think you should be able to have problems or you won't be a good trader. But a lot of people lose money simply because they can't hold their emotions. They want to enter every trade. No. You need to learn to wait and let the big tell you where they are going to before you make a move. But if you're trying to chase the market will beat you 110 times. You need to understand that. And that's how real I can be with you. So once you know that you don't need to do this and you have a set of rules that you can follow, trust me, you'll be a good trader. Just like I said, in this space we are in, I'm just here to tell you what it takes to be a good trader.